All right. Hi, everyone. Welcome so much. Welcome today. It's so great that you're all here to talk about what we all think is a very exciting and interesting topic. Of course, accounting, bookkeeping, tax tracking for NFTs and crypto in general. So I'm joined by two experts in this space, Emily and Mary. Why don't you guys introduce yourselves, talk to us about your current job role and what got you into NFTs.
Sure. Hi. My name is Mary Kauffman. I'm currently at an infrastructure startup that's focusing on the Lightning Network, but I very recently joined. And before that, I had the pleasure of being at OpenSea for a little over a year, leading their technical accounting team. So we thought long, hard, and deep about a lot of these issues.
My name's Emily Cheshire. I'm a CPA with Aprio LLP. We've been in digital assets for over a decade now, which is like a millennium in crypto terms. And I head up the accounting function where I literally work with digital asset companies and NFT businesses all day long. And we just really love kind of seeing the creativity and to Mary's point, really kind of scratching our heads on, how to account for it too.
And I'm Amy Kalnoki, co-founder and COO at Bitwave, and we make a digital asset accounting, bookkeeping, tax tracking software that's used both for NFT accounting, but then also generally for crypto transactions. And I'm excited to be here today. All right, Emily, why don't we start with you? Could you give a brief overview of NFT accounting?
So this is where the gray area begins. Right now, in kind of the current state of accounting rules, there is no regulation specific to NFTs. So what we're having to do right now is literally fit a square peg into a round hole. So, the accounting regulations, a lot of all the kind of CPA firms out there and sort of companies are literally having to kind of peel back the curtain and really take a think about what regulations apply and then how to account for it. Now, at a high level, the complications and the things that you have to think about for NFT accounting is that, really first of all, what are you doing? Are you selling it? Are you purchasing it? Are you an exchange in between? And that's going to firstly affect the accounting for that. But really, what is that NFT for? NFTs are so broad, and we're constantly seeing these new use cases. You could have art, you could have tickets. It could actually be, there could be a physical asset behind it too. And really what's behind it is going to really drive effectively what the accounting treatment for that is. So that's really kind of the first stage. So kind of a high-level example is, if you're a creator and you're selling a ticket, you're not going to recognize that revenue straight away because, you haven't had your event yet. So you're not going to recognize that revenue. On the flip side, if you're like an artist and you're selling those NFTs and people are minting them, you're going to record that revenue at the point of sale. So there is a huge differentiator on how to account for it based on what the asset is. And if you're a kind of a collector, a purchaser, or you've got a business that's kind of owning it on that side, it's going to be treated typically as an intangible asset. So, that's going to be typically, on your balance sheet as an asset. But again, it really depends what it is. So, it's really important to kind of get guidance in, professional guidance to have a look at what you're buying or selling, what it is, what your obligations are. And that's going to really drive, ultimately, what the accounting treatment is. And Mary, did you want to speak on the exchange side of things?
Yeah, I guess one thing that I'd echo there is the NFT itself is just the digital representation of ownership. And so really looking through that NFT as to what is it that you have an ownership in is the key to that. And to your point on obligations, it's as the owner, what are your rights in that NFT? And then if you're thinking about, say, the seller or the issuer or the creator, what are your obligations to that NFT? Have you one and done? Have you sold something and then it has gone down the chain? Do you have ongoing obligations? You see a lot of NFTs that give you rights to future merchandise or future access to live events or future, downstream experiences. And so that's where kind of the accounting can get really difficult because it doesn't match one for one of I'm selling you an NFT, and you now have it, and it's done. I think the other thing, thinking about exchanges, and as well as the creators and sellers, is when you think about kind of perpetual streams. So if the creator is going to receive a percentage of that sales for each subsequent sale, you as the original creator that's earning that stream, how do you know when each of those subsequent sales are happening? And how do you know what crypto asset that sale might be denominated in? And so knowing, when the timing of each of those transactions happen can get really complicated from everyone's perspective on the ecosystem.
Yeah. What are some of the ways people solve for that?
Well, a lot of them have crypto subledgers. So no, the way that you solve for that is, you need like a robust tracking mechanism. So making sure that you are, as a seller, what your assets are, where they are at any certain time, having some sort of transaction history to go along with that. Because information reporting is very complicated, and there's different requirements as you go to different parts of the ecosystem. But being cognizant of that and being cognizant as to what asset is being traded for that NFT. Is it Ethereum? Is it another NFT? Is it a stable coin? Because each of those have different underlying accounting treatments as well.
Yeah.
Yeah, and kind of just to echo that is that, typically these transactions there's transactions within transactions. So, you might be buying it with ETH. Some people might be just buying it with a credit card, or, there is multiple levels of accounting just in one NFT. And then each NFT is unique. So, they have to be monitored separately versus, digital assets, and you can kind of, it's easier to kind of categorize that. So it's really important to kind of keep track of, the NFT that you're buying, how it was bought, what that value was. And there is a lot of complexity there, which makes it really difficult to manage. And, that's just one NFT. So both as sellers and buyers, there's going to be, dozens, hundreds, thousands, tens of thousands. The volume can be kind of extensive. And keeping track of that, typically on a spreadsheet, it gets unruly very, very quickly. So we would always recommend, using a tool to kind of keep track of that, just because there is just so much going on.
Yeah, it's the whole reason why we created Bitwave, really, because it quickly becomes unmanageable if you're trying to look things up on a block explorer or anything like that on a spreadsheet. So any other challenges of accounting you guys want to highlight?
To your point, I think the sheer volume, and then just the different ways that you can buy NFTs. You can buy it on a one-by-one basis. You could sweep an entire collection. As a pro user, you could be trading it for a different set of structured assets. Mm-hmm. So just kind of knowing what you are purchasing and what are you receiving becomes kind of the fundamental, step one of doing your accounting. And I wouldn't say that it's too far different. The onus isn't too far different from an individual. So if you're the seller, if you're the creator, because you're going to have your own reporting obligations of your gains and losses and balances at any certain time, as to a larger company or marketplace or exchange would have as well. So I don't think this is something that anyone could necessarily sit it and forget it.
Yeah, and also kind of to add to that as well, typically the way that you're going to initially kind of record these, both the sale and the purchase is at cost. Now, the kind of other challenges, that cost doesn't end there, because you're going to an event. Well, have you used that? Does that cost disappear? Does it become an expense? What if you've used a portion of it? So unlike, accounting for digital assets is complicated anyway, but accounting for NFTs really kind of ratchets up that kind of additional level, because there's all of these like nuances and components that kind of just compound. It's kind of very, very unique. They're very unique assets, and the accounting for it's kind of has to be specialized and on a sort of case-by-case basis as well.
Because sometimes you don't know what the future benefits will be. They haven't even been decided or thought of. Yeah.
Absolutely.
So you touched on valuing a little bit. So maybe let's dive into that a bit more. Like, how do you fair market value an NFT that you're currently holding and maybe have held for a few years?
Yeah, and our favorite answer is it depends. So when you think about it, this all goes back to looking through that NFT to what do you actually own? What are your actual rights in it? What are the obligations? So if you have an NFT for a rare case of wine, you may actually need to have that wine valued by a specialist. Same with art. If you have either a full or fractional ownership in a piece in the Mona Lisa, it may need to get valued, which may be different than traditional art and PFPs and those types of things that we think about on marketplaces, where, again, to Emily's point, there is no authoritative guidance in the accounting literature. There are things that we can point to, but you are thinking about fair value in the accounting sense, which is effectively an exit price. So some of the conventions that people take are looking at sales data. So what's the sales history of that NFT? Is it traded in an active market? So is it actually moving? That's better evidence than if it's been sitting in a single wallet for forever, or if it has not been sold. When you think about valuation, did you create it? And so if you create it and it may not be on your balance sheet, it may have no value on your balance sheet at all. Think about kind of the FTT token probably shouldn't have had a value assigned to it, whereas something that's actively traded, it's much more likely to have a fair value associated with it.
Yeah, and NFTs are unique, right? So it does make it very, very difficult to kind of pin a value on it. Now, being accountants, we are the most conservative, prudent people in the world, so we would always kind of err on the side of caution. Thus, if it's self-generated, we don't want it on the balance sheet. But it depends on the asset. So, if it's readily traded, there is quite a few platforms out there here now that are becoming and growing into doing NFT valuations. But it's an indicator. It's that value is not kind of directly what it's worth. The market is still new. It's still very volatile. And also, they will have a look at things like, how rare is that quality of your NFT? But these are really only kind of springing up for kind of more, just the sort of art NFTs right now. The other NFTs, and there is a huge variety of them, there's no real sort of tools around. So there is professional valuers who have actually traditionally come from the art world, and they're moving into kind of really valuing NFT assets, because you might also need them for other reasons. It might not just be for accounting reasons, but you might want to get them valued for things like insurance as well.
Yeah, but we integrate with several of those providers that do valuations, because it is such a big challenge and people have different methods, and I guess consistency is probably always a good recommendation. Whatever method you're using, good to stick with one. Maybe let's talk about fractionalized ownership of NFTs. That's an interesting topic. What are some of the accounting challenges there?
Can I take that?
So it's definitely kind of a new area, and there is a lot of nuances around it. So what I would say is, it really depends on what side of the coin you're on. So there's a lot of people that are kind of purchasing those, and then you've got kind of the subsequent sales of those like fractionalized NFTs as well. Now, it's an interesting topic. I think that the call earlier, the meeting just before this, they were doing kind of like SEC side of things too. And there is a lot of kind of discussion on kind of fractionalization of assets and how NFTs apply to that as well. There's been a lot of talk about it as well in kind of like real estate and things like that. And it can, it's a kind of an interesting area of topic that I think people have to sort of be particularly careful on at the moment.
You mentioned earlier, I think, Emily, that there's not great guidance for accounting, but what about for tax? Is there any clear tax guidance for NFTs?
So, certainly on the tax side, it's typically treated there is some regulations that are changing, but right now it's treated in a very similar way to how to treat kind of digital assets, so your Bitcoin, your Ethereum. So when you are, if you've got them on the balance sheet so that you're owning the you're owning the NFTs, at the moment you're going to have to be a capital gain, or there'll be a capital gain or loss based on that disposal. And that's going to be based on whatever that price is that you sell it at in whatever currency it is. So, ETH, for example. There is likely to be some changes. There's a proposal out right now with the IRS where they're actually looking at, for art, taxing that as collectibles. Now, that's only at kind of the proposal stage, but that has an effect on the tax treatment for it, and for certain people, the tax that you could actually pay on that could increase as well.
Yeah, and the one other thing I think about in that area too is around airdrops. So just because you maybe airdropped an NFT that could have value that you need to think about in this world as well. So also understanding when you're receiving those airdrops, do you actually have control over that airdrop is something to think about. Not so much on the tax regs, but on the accounting side, you guys probably heard that there's a proposed new crypto asset standard for book accounting, or for GAAP. For the avoidance of doubt, right now it excludes accounting for NFTs. So whereby crypto assets may be moving to a fair value model where you would write it up and down through your income statement versus the current intangible model. NFTs are excluded from that guidance. So we will be still in the current guidance, which is first look through the NFT as to what it is, and then follow the applicable guidance by analogy.
We have a few minutes left. Anything else you guys want to highlight, or we can open it up for some questions?
I was just going to briefly touch on some of the just general kind of changes, and you touched on fair value for kind of assets that aren't NFTs, and this just goes back to why you need additional tools. Is that value is going to fluctuate a lot, and for you to have to go back and review everything at the end of every month, at the end of every year, it's very difficult to do manually. So that change alone is just going to have huge impacts on just the additional work needed to kind of keep track of those sort of changes.
Completely agree. It's changing all the time. And when you think about other, even in the NFT space, other costs involved, gas fees, transaction fees, et cetera, these are moving tokens from one chain to the other, bridging, wrapping, all of these things that may be ancillary to an NFT transaction. There's underlying accounting to all of it. And so being able to track each of those events, when those events are happening, is extremely important.
Yeah, each one of those is an accountable event, and then could have tax implications as well. So that's why crypto subledgers exist, to do this in an automated, software-based way. We help OpenSea, they're a public customer, Magic Eden, NFT creators as well, because like Mary mentioned, you have expenses that you want to be tracking, as well as hopefully primary and secondary revenue events.
Yeah, I think my number one advice would be to anyone that's got a project or has a company in the NFT space, is to kind of tackle this head on and tackle it early, because once you realize that you need an audit or you've got to do your taxes, going back and looking at every transaction is very challenging. It's very time consuming. And you want that data now. You're running a business. So the earlier that you can get ahead of this, even before you've launched the NFTs, the better position you're going to be in as well.
Yeah, I guess that is really a good point. If you are an NFT creator, you should be thinking of yourself as a business if you aren't already. And there are no expense reports or receipts on the blockchain, so you have to proactively be collecting and tracking this information as you go along, or like Emily said, you will be in a mess at the end of the year.
What's the name of your company?
Yeah, it's called Bitwave, bitwave.io. Yeah, we help everyone from NFT creators to platforms and marketplaces to even immutable and blockchain. So if you need any help in digital asset accounting, bookkeeping, tax tracking, we're an automated software solution for that. And I'll be around if you want to catch me later.
All right.
All right, we're getting the signal. Thank you so much.
Thank you.
Thank you.
Thank you. Really, really, really practical, interesting stuff.